Ladies and gentlemen, welcome back to the channel. AMC Stock is up about 5.5% at the time of recording this video. Now let's get into what in the world is going on out there in the marketplace today. Markets are doing some wonky things across the board we need to talk about urgently right here and right now. So we're going to go ahead and jump into it. Let's go ahead and get started. Hit that like button and subscribe to the channel if you guys have not done so already. Thanks for doing that, and let's go ahead and get into it. So first things first, what in the world's going on today in the markets? Okay, stocks are doing okay across the board. Not a terrible day by any means, but you're getting some very weird things that are actually taking place. The Russell 2000 is up 0.60%. The Nasdaq is up 1/3 of 1%. The S&P is up 1/4. The Dow is up almost 1/2 of 1%. That's not what is strange. What is strange is this. So we got durable goods orders today that came out. Negative 5.4%, worse than expectations. But what did stocks do? Well, went higher, because obviously that should mean, lower rates, right? The economy's falling apart, essentially is what that's saying. Well, look at the probability for rate hikes and cuts. So for December, now there's no chance of a rate cut. There's a 5% chance of a rate hike. Yesterday there was a 0% chance of a rate hike. Same thing for January, about an 8.6% chance of a rate hike. Yesterday there was no chance of a rate hike, or like a 2% chance of a rate hike. So rate hike odds are actually going higher following this really bad durable goods orders report. Now for March, yesterday the probability was 27.5% that we would actually get a rate cut in March, and now it's at 23.7%. So the odds of a rate cut are actually going lower today, which is very strange, very, very strange. For May 1st, you're seeing here, now you're not pricing in a rate cut by May 1st. Now there's a 44.1% chance of a continued pause and a 42.3% chance of a rate cut. There's a 9.6% chance of 2 rate cuts and 3.9% chance of a rate hike by May. So after today, you're just no longer pricing in that rate cut for May. Now you're pricing in the first rate cut for June, and that is a 43.2% probability, and there is a 25.9% probability of 2 rate cuts. But following a negative 5% durable goods orders number, you would think the odds for rate cuts would actually be going higher, quicker, or with not as much time down the line. It's not exactly happening today. That is very, very strange. Now, what's also strange is this. U.S. crude oil tumbles below $75 a barrel after OPEC delays their meeting. And it says, OPEC said in a statement that the meeting of energy ministers is delayed until next Thursday. The organization did not provide a reason, but Saudi Arabia is struggling to convince Angola and Nigeria to accept lower output targets, delegates told Bloomberg. There was growing anticipation among traders that OPEC and its allies, called OPEC Plus, might implement additional production cuts, which pushed prices higher late last week and early this week. But compliance is a major challenge for OPEC Plus because many countries have an incentive to not stick with their production quotas, said Thomas Varga, an analyst with PVM Oil Associates. Compliance will be weak going forward. He pointed to Russia and in particular, which needs to finance its war in Ukraine. So basically Saudi Arabia is having trouble with other countries just trying to flood the markets with supply and really not following their specific quotas. So that is a little bit of a problem. Kind of strange. Now this article says bad news for Black Friday. Retailers cast doubt on holiday shopping with cautious guidance. It says many retailers struck a cautious tone when they provided their holiday forecast during third quarter earnings season or earnings reports, spelling trouble for the holiday season right as it kicks off. Holiday spending growth is expected to slow this year after seeing outsized gains during the COVID-19 pandemic years. Companies aren't sure just how much customers will spend this year in the face of persistent inflation and rising interest rates. And it says even Dick's Sporting Goods and Abercrombie & Fitch both raised their full-year guidance on Tuesday after strong third quarters managed to underwhelm with their holiday forecast. If there's one theme that captures the commentary, it's caution. And while some retailers may have been overly conservative with their outlooks, the resounding lack of confidence spells trouble for holiday quarters and raises questions about the overall health of the economy. It says consumers are still spending, but pressures like higher interest rates, the resumption of student loan repayments, increased credit card debt, and reduced savings have left them with less discretionary income, forcing them to make trade-offs. Target CEO Brian Cornell told analysts on a call last week. As we look at recent trends across the retail industry, dollar sales are being driven by higher prices, with customers buying fewer units per trip. In fact, overall unit demand across the industry has been down 2 to 4% in recent quarters, and the industry has experienced 7 consecutive quarters of declines in discretionary dollars and units, he said. When asked about the upcoming holiday season, Cornell said it was too soon to weigh in on early sales, saying only that the company was watching the trends carefully. So yeah, across the board, we're just not hearing good things about the holiday season this quarter that we are currently in, and that is a little bit of a problem, especially right now when the markets are so sensitive to what's going on here in the economy. And this durable goods orders today, -5%, is definitely another one of those things that says, hey, there could be a problem that is currently going on. Now let's get into a little bit of AMC stock data here, and you're up like 6% here on the day at $7.03 per share. It's definitely a pretty good day for AMC overall. There's really no exact rhyme or reason why this is necessarily happening. We're not getting any new, news that is coming out here on the day today, but we'll go through the data here just so everyone is caught up to speed. So if you're taking a look at the cost bar max, that's at about 7%. Cost bar minimum -0.2%, cost bar average 1.45%, short interest free flow at 9.06%, $119.14 million worth of short positions, days to cover 0.76, about 18 million shares that are currently sold short, shares out on loan 13.1 million, cost to borrow 1.35%, utilization of 29.66%, a short score of 53.69 out of 100. If you take a look here at the Stock O tracker data for AMC stock, you got 10,734 calls currently in the money, 379 calls out the money. In the money puts at about 16,000, out the money puts at 22,621. So some activity over here, to say the very least. This week is basically done. Today is the last real trading day of this week. Tomorrow, stocks are obviously closed. Enjoy your holiday, enjoy your Thanksgiving. And then on Friday, stocks are going to be open, but bonds are not going to be open. And our markets recently have been trading so much based on the bond market. Friday is really a toss-up, and you really don't know how anything is going to react to it. It's really going to make for an interesting, next couple of days or so, to say the very least. Now, let's go ahead and get into some of your option activity here today with AMC stock as well. You do have 2 orders totaling $146,000 with a positive order value of 57%. But I personally think when you look at AMC stock in particular, the stock has probably bottomed from here as long as you can stay above $7 into the end of the trading day. If you do fall under 7 and you close in the 6s, then it's very possible you fall into the 5s, and then you're in a very problemsome spot over the next couple of weeks, because I think you probably fall into the 5s if you don't close above 7 today. $7 per share is a very important level. Currently, AMC stock is at $7.04 per share, which is right at about that low you had also set on September 11th, 2023. So today is a very important level. You do want to see a close above $7 per share. Now, take a look at the RSI. That is at 34. So you have bounced from 29 to 34. That is a good sign so far. All things do look good with the RSI. With the MACD, you're in negative territory, but it's not all too bad. It's definitely not that alarming. you know, it actually looks pretty good considering the fall that we have seen recently. Nvidia, following their earnings report, is down about 2%. Really, I mean, Nvidia was just a killer of a report again, and that stock can't even be green today. Now, TLT is up 1/3 today. That just means your long-term treasury yields are going down just a little bit here today. USO is down 1.24%. That is a little bit of good news as well. The dollar is up about 0.5%. That is also not exactly great, but we have fallen so much recently. You know, it's hard to say that the dollar is going to recover from here. So the dollar falling is good news. I just think today is really just a digestion period of what we've seen over the past, you know, couple of days or weeks from here. Because you know, we've just been in this moment in time where there's been a lot of Goldilocks like data, and stocks have been performing very well. And you know, is that going to continue? Where should stocks go? Markets are just trying to figure that out heading into this holiday season here. But nonetheless, for AMC stock, it's looking pretty dang good today. Really, I can't complain with the almost 6% move we're seeing today. The only gripe that I will have, if we cannot close above $7 per share, if we close in the sixes, that still opens the door for a lot more of that downside. But a close above $7 per share is going to find a lot of support around $7 per share. That would be my expectation, and then that would be much, much better for that possible upside movement, guys. So again, just a quick rundown. Today is really the last regular trading day of this week, and then tomorrow, stocks, everything's going to be closed. Thanksgiving, have a great holiday. And then on Friday, stocks are going to be open, but bonds are going to be closed. And how our markets have been trading recently is bonds have really been dictating the way. So, you know, we just don't exactly know what's going to happen with that. Friday's going to be a real wild card. But usually Black Friday, if stocks are open on Black Friday for trading, it tends to be a pretty good time, and stocks tend to go higher on Black Friday. Just with the holiday, you know, shopping season, people are spending money. It makes sense, right? So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.